Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, columnist for the New York Post. I'm here with my partner in crime, Bob Sloan from the partner at S3 Partners, the best data you're going to get on markets. And we're eagerly awaiting exactly what's going on with Nvidia earnings. It's what the entire market is focused on. It's what everybody wants to talk about. I've gotten a lot of requests today from various media organizations to talk about Nvidia. What I think, I don't know what I think. That's why I got Bob around here. We keep him around just because he knows stuff about stuff.
Charlie, data is expensive, right? We're overhead. That's where we're here for.
Well, let me ask you
real
this.
Content comes from the expert.
Before the numbers come in, is this the seminal event it should be that we're making it out to? Because everybody's talking about this. What do you think?
I think it's bullshit. Honestly,
good for you.
Honestly, this print is such a load of nonsense. It really is.
And why?
Because
and why?
We'll get into why. Because the print's going to come out and the market will react the way the market's going to react.
Yeah.
Here's.
We should point out Nvidia is not pets.com.
No, it's not.
For people that are saying we're in 1929 mode, I know you were hot and heavy to take on somebody that keeps suggesting we're in the middle of the great crash of 2025, likening it to a great crash of 1929, and trying to sell a book at the same time. So tell us a little bit about that.
Well, first of all, here's the point. The point is that in today's market, the top 10 most owned stocks are also the top 10 most shorted stocks.
Yeah.
Okay. So why do crashes happen? And what he's trying to say, and
who's he? Let's get it.
Sorry, which is Andrew Sorkin.
Right. He's a friend of mine. He's an anchor and a columnist. Anchored CNBC columns.
And he's a wonderful writer. And he really does make. By the way, he does make.
I think he's better on TV than he is at writing. But go ahead.
Well, listen. I'm going to leave that to you. But I'm going to tell you, as a consumer, you're both great, and you both make the characters come alive. And he does do a great job of making the 20s and the era of the 20s come alive, and the characters are readable and they're relatable and all those things. But here's the flaw. He is saying that the same things that we saw in 1929 are happening today. It looks the same, right? The politics are, they're roiling. Obviously in the 30s there was a move to fascism and communism, and democracy
is threatened.
Well, no, that's not true though. There was a huge communist movement.
Well, that came during the Depression
and the bonus marches, and there was a lot of friction. That's not true. You and I we can have a nice meal about that. Yeah, but the inflection came in the 30s, and there was a rise in technology, right? There was radio technology at the time. There was railroads and all these different things that really made things in the world move faster. So that is not market structure.
Yeah, no, I know. That's
right, so
that's chamber. That's the music.
But all that. But the here's the point. The point is that he's looking at the wrong year. Why do markets crash? Mm-hmm. They crash for two reasons. One, everybody sells out of their long positions at the same time. That happened in 1929. The second reason why crashes happen is your hedges stop working. It's not that they don't work. They stop working. And that was happened in 1987. Right? Remember portfolio insurance, no combining futures. The market sank, 508 points in a day. Was down.
It happened in 2008. Do you remember?
The hedges didn't work. That is exactly right.
On subprime debt, yes.
That's right. The hedges didn't work. They stopped.
VAR. Remember VAR? Remember everybody's VAR ratios? They used to run around, I got a great VAR, value at risk.
Okay. So here's what's happening today, and this is why I'm a little hot under the collar with some of the analysis, because it's making people nervous when if they just look at the data. Mike Bloomberg has a great thing. Don't give me opinion, just give me data. And here's the data. Okay. The Mag 7 is correlated to every index in the world. So the Mag 7, I think, is 37% of any index in the United States. And the Mag 7 is also 20% of all the short interest in the United States. So the real lesson is 2008. What happened in 2008? Charlie, you know this better than anybody else. How did Paulson and all these guys make all their money? They shorted the AAA, right? They shorted the AAA bonds, and then they bought stuff down market as a quote unquote hedge. And they did something that was really counterintuitive. Why would I short something that was AAA? Because they understood it was not AAA, it was diluted. In today's world, the way you short the entire market is you short a basket of Nvidia, Amazon, the Magnificent Seven, because it's one-to-one correlated with every index. So you don't have to short the entire index. You just have to short those 7 stocks. Okay. Now that I've shorted the market, that's my hedge. How do I outperform? Well, what do? Well, I go out and I go buy things that are higher momentum and not correlated, like the Mag 7. And this is why our battleground stocks are so important, because it's a measure of risk on and risk off for momentum. We know that 20% of all short interest in the United States is from Mag 7. We know that. We also see that the number, not necessarily the amount, but the number of battleground stocks that are in these high, and we talk about them every week, right? We talk about IREN and Teradyne. We talk about all these AI adjacent stocks. People chase them because they know that they can short the Mag 7 and short the index. And then how do I outperform the index? I got to buy things that are high momentum. That is not a crash scenario.
Yeah, no, I know. It could be a correction scenario.
Well, okay, but so what? But that's not a crash, right? That is not banks going out of business and all that stuff.
We should point out, what is a crash? I mean, the crash is, I guess there is a definition of it, right? More than what? What's the numeral? What's the percentage on what constitutes
Bear market's down 20%, right?
Yeah, I mean,
and it's quarter over quarter. There's recession is quarter.
I would say he's going beyond that, though. Andrew is trying to make this to be a sort of epical event that's going to lead to something in the economy that's much more systemic. We should point out that the economy in 1929 was, actually it wasn't so bad. What happened next is what caused the depression. Okay, you had the crash because we had overvaluations, we had a lot of funny money running around, but then we had the government response to it. Okay,
right.
The government response was Smoot Harley, was tariffs. I guess you can make the comparison with tariffs now, but I mean, again, Hoover was still the president at that point, doubled down on restrictionary fiscal policy with tariffs and then tax increases to plug the budget deficit. Okay, so he's taking liquidity out of the system. The Fed wasn't very compliant back then in terms of monetary policy either. What does Roosevelt do? He comes in and he ramps up socialism dramatically. Now, there were transfer payments to poor people. Not saying, people have to eat. I get that. But he basically crowded out private investment. So when
so that's, and this is the point.
That's a structural problem with the economy. In 2008, you literally had the banks sitting on more, on their balance sheet. Banks, because they merged with their securities firms, sat with gazillions of dollars of underwater debt that they couldn't sell to investors because of the housing crisis was starting, and every bank was insolvent at that point.
But Charlie, don't have this is like, it gets people all excited because they're not reading the terrain of the marketplace correctly. And what I just said, people are shorting the Mag 7 to short the entire market.
I'm looking at the news as I'm reading.
So let's go back to what we just said. Yeah, and
nothing yet. Sorry.
No, but this is my point. right?
Yep.
Stock's way up. Okay, fine. So, here's the point. Everybody gets all frothy. We're all in oh my God, people spending too much money. Okay. When 20% of the short interest is the Mag 7, Charlie, and you see this, that's your new definition of what AAA is. So what replaces AAA? What would replace them? You need a MySpace, Facebook moment, where a new competitor just wipes out the current incumbents. Is there anything like that on horizon for these guys? Not that I see.
No,
right? Not
these
really.
guys are these guys are wiping out things.
Yeah, but that's the point, right? So then the second thing is antitrust. That would replace, it would break them up. But under this administration, I'm not going to say it's impossible, but highly unlikely. So then what's the third thing? Third thing is, you know what? The deals they're cutting for compute versus investment, it's crazy.
Yeah, the circuit. In actuality, right? Their circuit. They're lending to themselves and making money.
Yes, but yes and no. Yes and no. Think about Facebook and what it did. WhatsApp, Instagram, all the things that they've done to expand. And Amazon, look what it has done. Right. So the market is basically saying, yeah, you guys built the category killer. You built a unbelievable tech platform that dominates your space. But when you tell us you're spending all this money on something new, we're going to fade it. We don't believe it.
By the way, the stock is up over 3.5% after hours.
3.5%. And so I look at this and go, okay, people thought they were crazy for Instagram. Not. People thought they were crazy for WhatsApp. Not. People thought they were crazy for Whole Foods. Not. We could go on and on about the acquisitions, right? So all they're doing is ensconcing themselves in the market structure. They are making themselves a stronger candidate for AAA. That's why people short that to hedge the marketplace, because they see what's going to replace these folks. Nothing.
I know. And
nothing today. Look, tomorrow is a different day.
Bob, corrections are normal. We should point out that even the .com collapse, which I wrote a lot about, I wrote a book on that. My first book was on that. What came out of the ashes was some of the biggest, it was all those companies that you mentioned, Facebook, Amazon, Google. Out of the ashes of that drawback came some really strong companies that powered the economy. The .com collapse was nasty. If you were an investor in pets.com, if you had your money in the S&P, you wrote it out, or you had your money in the NASDAQ, you wrote it out. It hit a low of, I can't remember what the low was. It was 1,000 or something. Look what the 1,000 plus. Look what the NASDAQ is trading at today. We should point out that these sort of corrections and collapses, usually lead to something better at the end, because it's the way the market sort of finds out or discovers price and value and which companies are fugazis and which aren't.
Well, that's the point, though. In an indexed market. In the index market, it's really hard to get price discovery. So when 70% of every stock is owned by 3 or 4 different companies that, because of their index funds, it's a different market structure. That's why I think Andrew Ross Sorkin's analysis of 1929 is the, may I meet you analysis. Okay. It really is. It's may I meet you.
Bob, did you ever
it's so old. It's so ridiculous. It's 30 years old. Come on. Did you ever use a line like that in work? No, I'm serious.
I'm just trying to think. It sounds kind of creepy that the woman might throw like a drink in your face. May I meet you?
May I meet you? I don't know. I mean, it just sounds like a beta move.
How we met?
It's just so beta, right? It's terrible.
Didn't we, when we first met, you came up to me, may I meet you, Charles?
I said something like that, and you were like, get the fuck away from me.
By the way, you didn't do that, but that has happened to me in the past. We don't have to go into. Again, the tariffs do scare me on a macroeconomic basis, because I see these numbers like persistent inflation, 3%, maybe, who knows? I see mixed economic numbers. AI is driving wicked investments. People are actually working to build these AI plants, right?
No doubt.
There's no doubt that that's leading to employment. It could take some jobs away. It's going to make life a hell of a lot more efficient for people in the information economy. You and I are going to. We already use AI to. I mean, it cuts my research time down dramatically. You know, in the old days, remember I remember when you really had to research something, you had to go to the library, look up the card catalog. Right now, it's all here, and now it's like AI spits it out with the reference number. You always check the reference to make sure it's a legitimate source, and it often is. And you know, and this saves my time in writing. I can write a lot more efficiently. Now, you could say that will it take my job as a writer? I find AI writing really bad. Number one, and number two, by the way.
Well, what's bad about it? What's bad about it? What you know? You are a great. By the way, everybody that reads Charlie's stuff knows he has a gift for simplicity.
It's not very conversation. It's not very conversational. It's almost like it's like a robot is writing it. And the other thing is, they can't. It doesn't do reporting.
Well, a robot kind of is writing it, but
yeah, well, it is, right? And so it sounds robotic. And the other thing is, I'm not saying that there's not a need for that. It is. It doesn't do its own reporting. Finding a number is not reporting. Reporting is me going out there doing what I do with Paramount and trying to figure out what the who's bidding and how much and all that. For Warner Bros. Discovery, which I've been covering. Which, if you want, we can get into that later. I just wish Nvidia would these guys would get off their ass.
They actually reported $65 billion. They beat estimates. Stocks up, and you know this is what I was trying to say.
They beat estimates. We know they beat estimates. See, that's I kind of knew that, and here's just intuitively you knew it, and you knew the stock would pop because it's been correcting. Now, if they really shit the bed, Bob, you know, tomorrow could be a rough day in the markets, but I don't think that's what we're talking about here. Right?
No, actually, so here's what's happened, right? You know, if you look at the high momentum stocks, so we've been talking a lot about on this show about baskets of highly shorted stocks, buying that basket, buying those battleground stocks where active longs equals active shorts, and buying a basket of stocks where the short interest is actually greater than the active long. That's where the action is. That is what is providing people outperformance. And so, you know, you look at a guy like Michael Burry and everybody says, well, you know, he lost a lot of money, right? I mean, I don't know how much he lost, but he closed down his fund. He's only going to do things privately. Yeah. You know, this is not a fundamental value market. It's not.
No, definitely not.
And he found out the hard way exactly what we're talking about in this show. We are in a golden era of data positioning. And as long as the Mag 7 correlates to each index almost 1-to-1, you have a way of shorting the entire market and then going out, getting financed from a bank, and then going out and buying higher momentum things. And what we saw in the last 2 weeks was there was some turbulence, right? You know, Nvidia, nervousness about Nvidia, but more so, you know, the media was really whipping up, you know, we're in a crash and we're in this, and then, you know, it's AI and they're spending too much money, and they're whipping up this narrative when in fact it was just the high momentum stocks that were either sold out of their portfolio or they took down some risk. That's all that happened. Not this, we're in a panic and it's going to crash and it's going to, and it's just whipping up fear, not understanding that the positioning and the data tell you everything. And the thing you got to look at is, like we said, what takes the Mag 7 out of their seats as kings of the marketplace? That is what every single investor should be looking at every single day. Are these stocks correlated to the market or index that's important to you 1-to-1? When it stop, that's a bad day for the marketplace. And so that's why I say, you know, like, you know, may I meet you? You know, it's just this analysis that has nothing to do with anything today. You know, that's just not the way young people meet.
I've seen people write great books and just draw these parallels that make no sense. Another person I respect is James Stewart, where
Great
he was
author.
tried, and I read Den of Thieves, and it's an interesting thriller on how they tried to go after Michael Milken. I don't believe Michael Milken was guilty of the worst thing in the world. James does. As a matter of fact, I think Michael Milken got railroaded into jail. I mean, if you look at exactly what he pled to, that would be a parking ticket right now. Parking of stocks, stuff that really just not systemically problematic stuff. But James Stewart went to great lengths to say, after writing this great crime thriller and how they caught him, that the underlying sort of theme was that Michael Milken helped destroy the economy in that brief recession we had in the early 1990s. That he caused the S&L crisis, that he did this, it was all bullshit. And I think a lot of people like sort of stretch for that meta-analysis, and I think that's what Andrew's doing with some of his stuff. We have tariffs
No
now,
doubt.
like we have tariffs in 29. We don't have tax increases, by the way. We don't have cutback in spending. We have a very liquid market, right? We actually have rate cuts. We have a Fed that believes in monetary policy. Is monetary. You studied Milton Friedman. We've learned something from back then. I don't buy it. Listen, if we get an economic slowdown, it's going to be bad for the country, in my view, because we'll have a change in government. Democrats might, or if we have continued inflation, Democrats can take over Congress. I mean, a lot of the good stuff that Donald Trump's doing, which I believe is good, is cracking down on immigration. You can't have open borders in a welfare state. I think his stuff. I think crafting decent trade deals is the way to go. He shouldn't have went, balls out with tariffs on Israel of all countries. So, but that's a mistake. But he's he kept the tax cuts in. He's deregulating the economy. He's bringing certain cultural things back to this country. He ended a war in the Middle East. He defanged Iran's nuclear capabilities.
Yep.
Damn, this guy I don't know. I mean,
I don't know how he puts his pants on in the morning. He's got balls.
He's got balls the size of an elephant. And he's doing some really good things. I'm going to be always critical of tariffs, but I don't think it's the existential thing. I think it could cost Republicans the House and maybe the Senate. I don't think that's a great thing. And I think it's a net a drag on the economy. I don't believe it's creating all these jobs. He keeps saying it's creating these jobs. I'm like, most of the jobs are people that all these companies say they're building here. They already have plans to build here.
I'll tell you one thing, Charlie. The one thing that's interesting, the BLS was supposed to report employment today. It didn't.
It's doing it tomorrow.
Because they're doing it tomorrow. Okay, fine. But if you look at some of the ETFs, TLT, and some of these things where the equity investors are basically trading on the direction of interest rates, the message is very clear from the equity markets. They think inflation is here, higher for longer.
Oh, interesting. Well, that's not good.
And the short interest in those securities has gone up pretty precipitously.
I'll tell you why.
It was supposed to be the print today, but it'll be tomorrow.
People, Donald Trump says he cut taxes, but in a sense, tariffs are increasing taxes, and it's increasing taxes on working class Americans. And if his plan, and listen, Scott Bessent, his Treasury Secretary, is a really smart guy and a really decent guy. I've spent a little time speaking with him, getting into his head a little bit. We met it briefly at a play, and I've listened to him speak and several times. He's really sharp. I mean, he was Soros's right hand man in currency plays around the world back in the day. But his plan is that the tariffs will bring in the short term revenue, and in the long term, any cost from the tariffs will be sort of superseded by all the fiscal policy supply side economics that they're throwing at the economy, extension of the tax cuts, deregulation. I don't know if I buy that, because number one, there were no real tax cuts. It was just an extension of what we already had.
Right.
Deregulation is good, and that's always good. But a lot of these businesses that are saying they're expanding here now are doing it for it's a PR thing. They were going to do it anyway. Tariffs do have an impact, particularly on small businesses, which is something like 40% of the GDP is produced by, or the employment of this country is
I
by.
thought it was more than that. I thought it was like half.
It might be half. I saw
Right.
40 recently. But by the way, companies like yours, I mean, let's face it, that's what you run. You run, under.
We've got, that's right. We got 70 something people around
Right,
around the world.
under 500 employees is a small business, and that's you. And you while you're in the data business, if you had to ship stuff from overseas, and I know people like that, it's not easy. You don't know what your costs are tomorrow, where to service, where to get the supply, how much it's going to be. So all this will have an impact, but I think it's much more of a Main Street problem than a market problem. Like, you can listen to our show and make a lot of money if you got money to play in this market, which you should be. We give good data points here, and but if you're a truck driver, different story. You're not speculating in the markets. And now, does the economy at some point, does the market somehow reflect the real economy at some point? I don't know. It hasn't in a long time.
Well, I don't know. It's a really it's a fair point. All these companies are spending a tremendous amount of money on CapEx for AI and robotics and data centers and power supply. The thing is, they also make a lot of money. So
that's true.
Oh,
that's true.
So
this is not Pets.com. This is
they're not burning. Yes, they're spending a lot of money, but they make a lot of money, and that's why I get a little annoyed with the general tone of feverishness, because it's such an obvious tout of your own book, while ignoring what's really happening in the underlying marketplace, which is exactly what we just said.
I don't know how anybody can draw broad conclusions on this. I think the best you can say right now is keep watching us, because this story is fast moving. It's changing minute by minute, day by day. And
we're telling you where the terrain is. We're telling you people short Nvidia, not because they hate Nvidia. It's because they're trying to hedge the entire marketplace. There's
and
a
they should
huge
be.
difference.
And that's what they should be doing.
And that's how you hedge out risk. If you want to hedge out the risk, you short a basket of these stocks, and but you got to go long something else, right? What do you go long? You go long something that's going to try to outperform.
Do we have some questions?
We have one on crypto, which is,
well,
what do we think about crypto? But I'm not sure what the question actually is.
Is it like, what do we think about crypto?
Well, what's the effect of Nvidia's impact on crypto?
Well, Nvidia was taken out in the crypto market. The whole AI bubble, for some reason, was correlated to crypto. I just looked at a couple of the, Bitcoin has been down dramatically, XRP down dramatically, Ethereum, they've all been down. So, there is some correlation. I'm trying to think. I don't know exactly why there is a correlation, but they are correlated. Maybe because they all rely on data centers to a certain extent, and
I'll give you my view. Right, we've said on this show many times, you have these battleground stocks or high momentum stocks where you have long and short equal to one another. And why are people playing in this space? Because they're trying to outperform the index. And so they short the index, and they try to pick those things that outperform the index. That's long short. That's a trade, by the way. Just like we said, Nvidia and Mag 7 is AAA. You short that. That's what happened in 2008. You shorted the AAA, and then you went long the single B. And you can put crypto in that single B bucket. And what's happened in the last 2 weeks is that single B bucket, or stocks that are high momentum, or assets that are high momentum like crypto, have sold off. Crypto's a lot for sure. It's fallen a lot more, but then again, it's the ultimate high momentum thing, right? So it should
It
fall
is
more.
momentum.
It should fall more.
Yeah.
So that doesn't surprise me. It doesn't surprise me at all.
Yeah, it
And what
doesn't
you it
doesn't me
doesn't.
either. I just haven't articulated it that well. That's very good, Bob. That's why we got you around here.
Well, that's I gotta pay my keep. So I gotta keep my spot. I gotta say something intelligent
Yeah.
every once in a while.
Uh, so do you expect crypto to come back on this?
Listen, I think people should take crypto and buy a little bit of it every month. I do believe in dollar averaging, and just forget about it. Because in 10 years, look, the United States government is making crypto legal. You can use it as collateral. It will be used in the banking system. Stablecoin is a fact of life. All these things
I'm
are
supposed to
happening.
go out to dinner tonight at Ilio's. You can join us if you like, with some guy named
Uh,
Mr. Crypto. Would you like to join us?
Let me check with the powers that be.
Let me see. Let me get this guy's name right. I think his name is Mr. Crypto.
Mr. Crypto.
I mean, that's what I thought. Max, our mutual friend Max Myers from CNBC, was saying that Mr. Crypto is we're gonna have dinner with tonight. So,
I'll tell you what. I'll stop by for a drink.
and maybe Mr. Crypto can pick up the tab in Bitcoin.
Well, I would expect nothing less.
Well,
You got to tell Yusef and Brian they got to start accepting different currency.
Yeah, I did say that. Brian's just for people that don't know. Bob and I have a favorite restaurant. It's called Elio's. It's on the Upper East Side of Manhattan. It's really a great place. It's a family place, family-run joint. Brian is the bartender. We know the whole family. Food's great. Fun night. Wednesdays or meatball night. So it's a great gathering spot. The Journal just ran a headline on this. Nvidia blows out earnings and soothing crypto anxiety, which
Okay, so there you go.
you
but
were
you can
saying
see
it
it.
before the headline came out.
Yeah, but if we know, I'll tell you one thing I did notice. To your friends over there at the Journal, we ran a story last show on Xiaomi, right? The
Right.
semiconductor maker.
Yeah,
right?
they
And all of a sudden, 4 days later, there's an article in the Journal about Xiaomi, front page.
So
when was the last time the Journal did
I will
something
say
like
this
that?
to the viewers out there: we get picked up a lot. Okay, we may not have Joe Rogan size audience. We also don't, engage in we don't
Conspiracy theory.
Well,
We're not conspiracy.
I'm a big fan of Joe Rogan, just so you know. I want to say that, but
but
we're
that's not our game.
We're not going to debate whether the Kennedy assassination is a hit by the CIA on this show.
Right.
So what we are going to do is give you like a really rarefied look inside the markets and inside data that S3 comes up with, and very exclusively. And so just keep in mind that's the value added that we give. And our audience is growing. I noticed we on my X feed, it's top 50,000 over the past week.
Yep.
Views. We are growing, and we're not going to change much. We're going to just deliver. We believe in blocking and tackling, and that's kind of what we're going to do. How we're going to build our audience, but just giving people actionable information, and you make up your mind, and some interesting opinions. We'll delve into that occasionally. Do you have any action? Speaking about actionable, do you have any actionable calls?
We've got a couple. We're making a bullish call on Walmart, which is tomorrow morning.
Interesting.
And that's our only pick for the week. We have one call.
Any sort of detail you can? Why is it bullish? What do you got on them?
Generally, there is signaling when you have a particular type of price action and short interest moving in the same way. Generally, that's bullish. And so this is a pure signal-based model. It kicks out when the price coming up to an earnings call behaves a certain way, and then short interest also behaving a certain way into the setup.
So
usually bullish.
About, I want to say 3 or 4 months ago, I had dinner with one of the top executives at Walmart. I don't want to say his name. It was an off-the-record dinner. who is bemoaning tariffs, saying at some point they have to pass those costs to consumers. I think we're at that
Sure.
point now. Is it possible that there's a move on the stock because people think that that we have it? We know exactly how Walmart is going to deal with the tariffs. Like they have some I guess some certainty of their future, right?
Yeah. All we're saying is this is what the data says to us. We don't have a fundamental view on tariffs. We don't have a fundamental view on how Walmart will pass that on the consumer. We don't have a fundamental look into the company. It's not what we do. We take the price action of the stock, compare it to short interest, compare it to other things, and say, is this a bullish or bearish signal? And that's what we do every week.
And you see bullishness. So, I'm just adding a little bit of flavor to it based on my reporting, is that, I think they got their hands around the problem, which when you have some sort of certainty as a business, it's always better than you don't know what the hell's going on.
Sure. And we don't know what the Supreme Court is going to say. It's funny that got
I think they're going to strike it down. Now now we should point out, what are we talking about here?
Yeah.
Trump has been sued by, I think it was a couple of small businesses or smallish businesses that import stuff, saying that his use of IEEPA, that's the Emergency Act, that bypasses congressional approval for tariffs, even though, there's a sort of clause that usually Congress has to approve these sort of economic sort of issues like tariffs, like anything that involves the fisc needs congressional approval. But if you, under IEEPA, if it's an emergency act, if it's like an act of war, the president can enact certain things like tariffs. They're saying, they sued, these businesses sued saying, what was the emergency here? Not that he wanted. Yeah. And the Supreme Court sounds like it agrees with the plaintiffs here, and that Trump's going to lose. Now, Trump could turn around and try to figure out a backdoor way, which I think they're trying right now, to figure out like how they can reimpose them. But man, it's going to be wild. I mean, by the way, you can't appeal the Supreme Court.
No, you cannot.
We're talking about we're talking billions of dollars here that would have to be repatriated. I mean, I don't know how do you unwind this?
In a crazy way, if they actually nullified it. Think about what happened in April. Independence Day, the market tanked like 20%. Conversely, if you actually nullify the tariffs, the market might tank 20%.
It might, because one of the things they're plugging the deficit with, even though it's still massively high and it really hasn't gone down, because there are spending measures short term when you cut taxes, right, or extend tax cuts, is with these tariffs. So we don't have the growth to make up for that yet. So this could be really hairy. The Supreme Court's not supposed to think like this, but suppose they turn around and say, this thing is going to cause like some really bad ramifications. It can. I mean, how can you not? I'm not a lawyer.
Public opinion's always ahead of the law, right? I mean, how can you not?
I'm not a lawyer, but is there a way to justify constitutionally keeping the tariffs in on the grounds that to change them now would be such radical would cause such radical strife in the economy that this court can't do that? I don't know, but under the law, it doesn't seem like Trump has much of a leg to stand on. So anyway, this is key. And is that coming anytime soon or any day now? Do we know?
That's a good question. I don't know. It surfaced, followed.
They had their hearings, and it didn't go that well and then Trump has been going nuts ever since, saying gazillions of dollars from tariffs. So he's trying to put the court on notice.
Totally.
Well, you listen. Again, even if they had to reverse tariffs, I don't think that's causing the 29 crash.
I think it's very, very unlikely, given the way the market is structured. Think about it. 70% of almost every single stock is owned by an index fund, a passive investment. That passive investment is funding liabilities for teachers and firemen and et cetera. they're not just going to dump the index fund tomorrow. It doesn't work that way. So what I think what could happen is that people stop giving their money to index funds and they put it into bond funds. And so the natural support mechanism isn't there. But think about what I said before, right? You have 350 to 400 billion dollars worth of shorts against the Mag 7 companies. Supposing there is a 10% or 15% correction in one day, how much do you think that those stocks will actually fall?
Yeah. By the way,
my guess is you get a downdraft and then people would buy it back because they love the hedge. So
by the way, the Supreme Court could do this any day now. Obviously, it may take.
Is that right?
Yeah, they could. But what's interesting is that Trump is, I mean, some of this stuff is funny. He's actually handing out checks now, right? I mean, that's been a big thing. I think this is like to put pressure on the Supreme Court. Get public opinion against the Supreme Court because you're pulling. He wants to give everybody everybody except for me and you, Bob, $2,000, right?
Well, listen, give the money to people that are actually in need. I believe that. I know you do too. I know you're just joking.
I need the money.
No, well, listen.
I need to pay the bill tonight at Ilios. I'm only kidding. I'm only kidding. I'm being crass and stupid. But yeah, I get it.
Yeah,
we don't deserve it.
Again, he's a master, right?
But there is public opinion. Yeah, but Bob, there is. I mean, this is how he's turning up the pressure on the Supreme Court. I mean, it's obvious.
Obvious.
I have to catch a train. Do we have any questions?
I think with the crypto question was probably the best one.
Yeah,
which we answered.
Yeah. Tomorrow is going to be an interesting day. I think the market. I mean, just if it follows normal course of action, should rebound. It's a little bit of a sigh of relief here, and then we move on. But still a crazy economy. It's not 1929. No, I think. Let me see my computer.
Not 1929.
11/19/2025, and
it's not 1929.
We're not like raising taxes. We're not doing stupid things, but the economy is kind of in flux. And I think there's a political price to pay for tariffs. And I think you could see that Trump is trying to get ahead of that through these kind of gimmicky things, the 50-year mortgage to make housing more affordable, 2,000 checks for most people. Those things usually don't work, just historically. So I think he's flailing now, and maybe he knows that, he kind of bought this one. That's what you get for listening to Peter Navarro and Howard Lutnick.
Wow. That's a whole different story.
Yeah.
For another week, my friend.
Yes. I have nothing against either of them. Just making a policy point here. Both were big tariff hawks. Okay.
Take us out, Charlie.
What's that?
Take us out.
Yes, we are over and out. This is Charlie Gasparino and Bob Sloan. Over and out for another riveting edition of Risk and Return. See you next week live.